is ABC7 News Sunday morning.
Good morning, I'm Alan Kraszewski. Coming up next on News Views, the deadline coming up on Tuesday. If you're working to get your taxes done over this weekend, we have some experts with advice for you. It's next. Good morning to you. Welcome to News Views. I'm Alan Kraszewski. A Sunday morning like this should be a relaxing one, but some of you may be pulling your hair out today if you haven't yet completed your income tax returns. The deadline to file is coming up on Tuesday, and this morning we're going to try to offer you some advice for you last-minute filers. I'm joined today by John Stanfield. John's a certified public accountant with Stanfield and Associates, and also Angela Perkins, who is with the Center for Economic Progress, an entity which provides free tax preparation for low-income families. So good morning to you both. It's great to have both of you here.
Good morning. Good morning.
Angela, I'm going to start with you first and just simply ask you, this time of year, what do you see going on in terms of what people commonly miss? Are there mistakes that you've seen that come up at this time of year especially?
Right. So at the Center for Economic Progress, we work with low-income filers. So what we see a lot at the last minute is people coming in who know that they're going to have a balance due, and a lot of times they're waiting because they can't pay it. So what we always tell people is make sure that you file by the deadline, even if you know that you can't pay the balance due. You can apply for more time to pay the balance due. You will pay some interest, but it's much less than the penalty for not filing by the deadline.
So you got to file. We hear this every year, of course.
Right.
You got to file, even if you think that you're not able to make that payment.
Right.
But now somebody might say, well, it seems like in order to file, aside from not having the money, right, I've got to do much of the homework in advance just to do that, don't I, John?
You do. To file an extension, you would actually still have to pay any amount due. It doesn't extend the amount or the amount of time you have to pay the tax. It just extends you filing the actual return. So you do have to make a good guess, a conservative guess of what you might owe and pay that on April 17th this year.
So there's no way to file without making that a payment of some sort? What if somebody says, I just don't have the money?
Then the interest and penalties will start to accrue. It's still better to file, though, because the failure to file penalty is much worse than the interest that will accrue on any balance due. So it's still very highly encouraged to file, like we said, even if you can't pay the balance due.
Somebody says, well, I can pay some of this now. I mean, are you good to do that? Do you make it, let's say it's, you make whatever, let's say $100, okay? Do you make that $100 payment now when you can and then say, well, I still owe you $400, to the IRS?
It's best to pay as much as you can because you will start accruing interest on what you haven't paid right away.
A lot of this, it seems, leading up to this point, is good record keeping and making sure you kind of have an idea of where you stand before you get into this, before you even sit down with your forms. Are you finding that people are doing that or no? And I realize it may differ here depending upon the individual. Or does it seem like in many cases, people have no clue and they're just wandering around out there until suddenly they realize they got to get their taxes done?
I mean, there's really a range that we see at our tax sites. So we see some people know exactly, what their refund is going to be or exactly how much they're going to owe, and other people are walking in and don't really know what they need to bring with them. So we encourage people to keep as many receipts and things like that, especially if you're self-employed, as you can throughout the year, and just bring it in and we'll help you sort it out.
Well, what are those key things, though? People say, well, what do I need to save throughout the year? And obviously now it's a little late to start collecting that, but maybe for next year it's good. What are the things you need to make sure that you keep?
All your income, even if you don't get a 1099 or W-2, that doesn't exempt you from reporting income that you did receive. So the burden is on you to report your income correctly. In terms of expenses, you should keep detailed records in terms of dates, amounts, what the purchase was for.
Now, when you say expenses, though, I mean, that's a broad category. Are we talking expenses for your work? Are we talking about expenses? I mean, obviously, just buying a meal is not a tax-deductible expense necessarily.
Necessarily. If you own your own business, it could be. So you'd want to keep that receipt. But beyond that, receipts for charitable deductions, this is more on the personal side, charitable donations, mortgage interest, real estate taxes, payments that you made throughout the year. Those are the main ones.
If you are going to be getting a refund for this past tax year, is that a good thing? Or does it mean that somewhere along the line you really didn't manage things well enough and that you've loaned the government money for free?
It can mean that. So we encourage people, if they are getting a big refund, to look at their W-4 and see if they can adjust their withholdings so that some of that money is coming throughout the year when they can use it, to pay bills and things like that and keep up with those things.
Is that something that's relatively easy to adjust and to anticipate? I guess that's what I'm getting to here. Now, let's say, if you changed your W-4 for this coming tax year, is it easy to do that and figure out, where you're going to wind up on the refund side or on the owing side? I mean, nobody likes to owe, But on the other hand, you don't want to be getting too much back either.
It's easy to change, but where you come up with that change is a little more complicated.
Sure.
You need to project out what you're going to make income-wise, what deductions you're going to have, and that'll come up with a tax bill, and you say, okay, well, I need to withhold at least that much throughout the year. So from that number, you can then change your W-4 as applicable, and then your withholdings will be adjusted. And
that's one of the things, obviously, as you finish your return for the last year, you can look at it and say, see where you stand, and then try to make adjustments so that you at least wind out around a zero balance area, right? That's the goal? Is that the goal of this whole thing?
That's the goal. I like to build in a little buffer for my clients because events happen throughout the year that may change your tax situation. So if you're getting back $500 or maybe even owe a couple bucks, that's pretty good tax plan.
You'd rather get back $500 than have to owe $500 bucks, I think is what you're telling me.
Exactly.
We're going to take a short break right now. When we come back, we're going to get other tips from you and also find out how do you avoid an audit. Right back. Welcome back to News Views. I'm Alan Kraszewski. This morning we're discussing some last-minute tips for filing your income taxes. The deadline's Tuesday, and my guest today, Angela Perkins with the Center for Economic Progress, and also Certified Public Accountant John Stanfield. Some folks looking at the returns this year, or when they talk to you, might say, hey, wait a minute, whatever happened to that credit that I got before? Seems like I'm getting less money back this year. Are you hearing that? Is that going on quite a bit?
Yeah, so last year there was the Making Work Pay credit, which was about $400 for most filers, $800 for people filing jointly. So we do have people asking, why is my refund a little bit lower this year? And then the state income tax increased from 3% to 5% in Illinois, so that's decreasing the state refunds a bit as well.
Are you seeing that too, John, with your clients? Or are you finding that refunds are maybe, I know it's hard to say across the board, but that some people are saying, boy, I thought he'd be getting back more. Maybe everyone feels that way when it comes to taxes. But
everyone feels like they're getting cheated a little bit. But, yes, as we said, the Making Work Pay credit expired this year, and the unfortunate reality is it's only going to get worse. There's a lot of credits expiring at the end of 2012 that people should be aware of. Most notably, the Earned Income Credit is set to expire at the end of 2012, as well as credits for child and dependent care expenses, and education credit, the American Opportunity Credits, set to expire.
All of these, of course, congressional matters that as they transfer.
This is, of course, as of today, absent any congressional action.
We have folks, a lot of folks who are out of work, and they might be thinking if they're receiving unemployment, for instance, do they even need to file? They do, right?
That's correct.
That's correct.
And they're impacted as well. As soon as you file for that with your benefits, unemployment benefits I'm talking about now, you're also not eligible for some other credits that maybe you thought you were getting whenever you actually had a job. Is that the case?
Right. A lot of our clients that only have unemployment income are wondering about what happened to the Earned Income Tax Credit. Well, since it's only for earned income, unemployment doesn't apply, so they're not getting the Earned Income Tax Credit, and a lot of them aren't getting the additional child tax credit as well, so it does have some implications.
If they are getting refunds, a lot of, especially lower income people might be saying, boy, I'd love to have this money now. And as you know, especially this time of year, folks who need the money, they say, I'm willing to get that refund as fast as I can, even if it means getting an advance or a loan against that refund. Do you advise them to do that, or do you say, please don't do this?
No, we encourage people to direct deposit their refund. You usually, if you e-file, you usually get it within 7 to 10 days. It's pretty quick. We definitely encourage people to get it direct deposited into a bank account.
And you're finding that the payments, I know there were some earlier questions with the e-filing and people getting refunds. Has the IRS solved that? Are they coming through in a decent time frame now?
It's gotten a little better. They were a couple weeks behind there for a little while this year, but I've heard it's been improving the past few weeks. So as we said, yes, I encourage you to e-file and direct deposit because you will get it within 7 to 10 days.
All right. For those who are working and have the means to do so, we hear every year about IRAs, individual retirement accounts. You can still make a contribution now for the past year, correct? Even though you're filing now, you can actually make a payment now, right?
Correct. Subject to certain income limitations, you can put in $5,000 or $6,000 if you meet certain age requirements up until the 17th and deduct it on this year's return.
So if you can, do you say, do this? I mean, you've got to have the money around, obviously, but for somebody who does, you say, do this, it's a good thing?
Yes. If you have the money laying around, maybe in your checking account, I highly encourage my clients to put that money in an IRA and save for retirement.
Once you've established them, Roth IRAs grow tax-free, right, once they're established, correct?
Correct.
Traditional IRAs, you're taxed whenever you take them out and retire eventually, correct?
Exactly.
Okay. And you can now, as I understand it, under certain circumstances, convert a traditional IRA to a Roth IRA.
That's correct.
Is that always beneficial or not really?
It's beneficial if you're younger. a little bit. If you hit a certain age, by the time you pay the tax on that money you've converted, it may not make sense for you. So I would talk to a tax advisor or financial advisor and make sure that it is the right move for you.
Because the question there is that you have to pay the taxes now, as soon as you do the conversion, right?
Exactly.
Because it's going to grow tax-free from there on out. All right.
Correct.
All right, let's get to the audit, the word that sends shivers up everyone's spine here. First of all, what are the red flags that you see out there that you know people need to avoid this, and this, or whatever, to at least reduce your chances that it's going to happen?
Definitely putting cash income on the return and having, as good of records as you can possibly keep throughout the year. So record keeping is the thing that we really
tips and cash income, you're saying under the table. I don't mean under the table, but you know what I mean. Where somebody hasn't given you a W-2 as an employer, right? And John, what do you see? What are the things that people need to watch out for here?
A lot of small business owners tend to get audited a little more, and maybe even more so statistically higher income people tend to get audited. If you make over $1 million a year, your audit chance is about 12%, which, that's a decent amount. So you may not be doing anything wrong. So getting an audit, I would just call an advisor right away. And if your records are good, you should have nothing to worry about.
Yeah. Do you recommend, and I know you're in this business, but do you recommend if somebody gets that call that they should find professional help immediately?
Highly recommend getting professional
help. Don't take on the IRS on your own, you're saying?
No, it's a very hard battle to fight on your own.
Has there been a deduction in your past history you've seen somebody try to take where you thought this is the oddest thing I've ever seen somebody attempt to pass by? Can you think of anything off the top of your head or no?
Recently I had a lady come in who wanted to deduct all the clothes purchases she made during the year because her rationale was that she had to wear clothes to work. So apparently if she didn't have a job, she wouldn't wear clothes, was her rationale, I guess.
Yeah. So. Now there are some jobs, if it's a required uniform or something, then it might be an allowable deduction.
But anything you can wear out and about besides work would
like this suit, for instance. There's no way I'm going to be able to write this.
I don't think so.
All right. Well, that's going to do it for News Views this morning. I want to thank both of you for joining us today. CPA John Stanfield with Stanfield Associates and Angela Perkins with the Center for Economic Development. And before we go, too, I want to mention they do offer, that is, the center offers free tax preparation services for low-income taxpayers. And if you want to get more information about that, just go to our website, which is abc7chicago.com. I'm Alan Kraszewski. Enjoy the rest of your weekend, and we'll get back to the news now.